Electric vehicle manufacturer Rivian had its IPO in 2021. Its IPO price was $78 per share, but the stock rose as much as 53% on the first trading day, closing at over $100 per share. That made Rivian's Saudi investor, Abdul Latif Jameel, $11 billion richer. As a startup, Rivian became rich too. They were valued at almost $88 billion, but soon, Rivian ran out of its luck. Within 6 months, the stock traded at under $30 per share. In the last 3 years, its share price has declined by a scandalous 91%, causing its retail investors serious financial loss. The decline came as a shock, especially to those who believed the EV company would survive any market onslaught because of its Saudi connection. They were wrong. You see, Abdul Latif Jameel is a hyper-growth investor. They bought 114 million Rivian shares with only $303 million much before the company went public. That is $2.65 per share. Even with Rivian's share declining 91%, they have a profit of over 300%. But the thing is, this investment helped Rivian grow as a company, while it also did not give it any chance to succeed in its own right. Rivian could turn to Abdul Latif for investment whenever needed. It was like giving your 40-year-old son as much money as he needs to make through the world instead of asking him to go out to earn his own money. Rivian remains a startup, nothing more. It did not take Ford, an early investor in Rivian, to understand where Rivian was headed. They sold 91 million Rivian shares in 2022, reducing their stake in the company to just 1.15%. The other major investor in Rivian is Amazon. At the end of 2023, Amazon was holding over 158 million shares of the company, valued at $1.75 billion. Amazon's investment in Rivian is out-and-out strategic. They do not want to make money from this investment. Jeff Bezos did not want to make Elon Musk any richer than he already was. He could turn to Tesla to create an exclusive vehicle for Amazon, following its specific needs. Instead, he financed an EV company to rival Tesla. It was not going to work. Where is Blue Origin now? Where is Richard Branson's Virgin Galactic? Virgin is trading at a mere $1.4 against its all-time high of $56 per share. In comparison, SpaceX is lifting its super-heavy space vehicle Starship to the sky. Amazon is a $1.82 trillion company. It does not need a profit from an investment of just $2 billion as long as that investment serves its ego. There was a time when solar stocks were hot. There was a time when pot stocks skyrocketed. It is not just the time for Rivian and the EV sector. Lucid Group is down from its all-time high of $55 to under $3. NIO is trading at $5, falling from its all-time high of $63. Where is Nikola? Where is Workhorse? Where is Fisker? If you have invested in these companies, you know how much money you have lost. I see many YouTubers recommending Rivian to their viewers. Rivian has $9 billion in cash, they say. Well, that is not a positive point at all. Rivian also has a debt of $5 billion. Their enterprise value is only $6 billion, including the $5 billion they have in cash. And they are burning cash every day. Besides, why do they hold on to so much cash? They could do two things. Number one, they could buy back their stocks with that money when it is 91% down and make a huge profit. Number two, they could invest the cash in ideas that could be profitable in the future. Unless, of course, they have run out of ideas and they believe Rivian's share price will decline further. In the last 24 months, Rivian's insiders sold a hectic $405 million worth of stocks, while they bought only $1 million worth of stocks. They sold most of these shares at under $25 per share on average. Rivian's chief accounting officer, Jeff Baker, dumped 31,000 shares of his holding just a few days ago at a little over $13 per share. If insiders are not confident that they should remain invested in their own company, why should you, the retail investor, take a position or remain invested in it? Your best bet is Tesla. Tesla is not an EV company, it is a software or data company. Its capacity to innovate and manipulate machine learning will increase with time, opening it to more market opportunities. It has an unmatchable brand identity which has real value in the stock market. Besides, it has an extraordinary mass appeal which is priceless. Only because of that, if only one EV company survives the test of time, it will be Tesla. Don't waste your money on Rivian. Thank you for watching. I will see you in the next video.